The SPX breaks the summer highs. Did the bears go into hibernation, or can they fight back? This is Invest with Jacob. Okay, guys, so in last week's video, we were looking for the market to push higher after the bears were unable to break support, and that's exactly what we saw. The market pushed higher up out of the range and took out the summer highs in the process. Now the question is, can the bears fight back? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the push up over the summer high, it does change things a little bit, so let's jump into the chart and take a look. Okay, guys, so here we are on the daily futures chart for the S&P 500, and remember, with futures, you do have contract rolls. We did have one last week, which pushes price higher and inflates the entire market from a kind of fill-in-the-gap standpoint. So when futures contracts roll, the market price moves up to the next futures contract price, and we use this back adjust button, so it back adjusts for contract changes. And what happens is market prices push up artificially. They weren't actual moves. So if we unclick back adjust here, you can see we have a big gap up on the chart that isn't a real gap up. It wasn't a price enabled to gap up. It was a contract roll. So if we hit the back adjust button again, it just moves everything up to align with that so that the chart looks prettier. But it does raise prices. So prices are a little higher than we're used to in the past. The SPX or cash chart does show a more accurate chart from the standpoint of not having contract rollover. So in essence, the difference between the ES and the SPX is that the SPX has pushed back over this high from back in July, whereas the ES has not. So with the push over the high on the SPX, it makes it an invalid potential for this to be wave 1 down and wave 2 up. So that means that the cash chart is saying this can't be a wave 2. And generally we follow the cash chart as a more accurate tell because of the fact that it doesn't have contract rolls and price change in that way. But we track the futures chart because we like to see what's going on under the hood in the after hours. So a little bit of a difference there, but the main factor is that with the SPX chart pushing up over this high, it does invalidate this 1-2 potential and does make the ABC for the bulls potential that we've been talking about for quite a while now, which has been my primary path for a while, that we would have an A wave up, a B wave pullback, and then a C wave up to new all-time highs. That's been our primary path for a while, and that makes that path much more probable now. Nothing is set in stone and nothing is guaranteed in the market, but it does make it more probable because we have climbed up so high into the all-time high areas on this rebound that it becomes less likely that you can make another high and push down. So in the big picture, what will we be looking at? Well, you'd really be looking at something like this where the primary count would be that this was wave 4 down, and wave 5 is taking shape as a large ending diagonal where you have an A, B, C up for 1. Remember, diagonals are all 3-wave structures, but it's a 5-wave count. So we're going to count to 5 with waves of 3. So the ABC up for 1, ABC down for 2, the ABC up for 3 here. Then you got the ABC down for 4, back into wave 1 territory, which is exactly what you would expect out of a diagonal. And now we'd be looking for this ABC and 5 to complete the move. And really, it would be up toward about 4,900 or so on the SPX, or closer to 4,950 to 5,000 on the futures. So on the SPX, we're looking at 4,900 to 4,950. On the futures, we're looking at about 4,950 to 5,000. So that's what the path would look like with this wave B coming down into the 4,400 area or so. We'd be looking for that kind of pullback to get that B wave set up for the C wave higher, to give us one last kind of blow off top into all-time highs before we see the market turn over at that point. So the 4,400 to 4,360 area on the futures, and that's going to be about 4,350 to 4,300 on the SPX. So that's the big picture primary count. Now, what's the secondary count? Well, essentially, we would be making this circle B a little bit higher as long as we stay under the all-time highs. So this wave B can have another high here. It's already made it on the SPX. It hasn't quite made it on the futures chart yet. But essentially what we'd be looking at is this top here where the A is, this B wave would move over. And if we got 5 waves down off of that move, then we would start to worry that we just made a bigger B wave and now we're starting a bigger C wave down. So the C wave doesn't necessarily go away until we make a new all-time high. But in essence, this A and B setup, this B wave starting to get pretty high for where you'd like to see a B wave come into as in relation to the all-time highs. So usually when you get up into these nosebleed areas of retrace, the market goes ahead and tests these highs, if not pushes through them in most cases. Can they double top? Can they come up just a bit short? Of course they can. They don't have to go to all-time highs, but the more likely scenario is that they would. So that's the big picture. We'd be looking for a B wave pullback. So still basically the same idea. You're looking for a 3-wave pullback into support and then an impulsive move back up to make new all-time highs. And as we've talked about for a while now, the pullback will tell the story. If we see a 5-wave pullback, then we could consider that one of C to the downside, where you'd have this low tested down here in this blue box, and then you'd look for a bounce and then down from there. So this path, I think, is much less likely to play out. But again, the pullback will tell the story, and that's why it's important to understand what happens when we pull back and how and why. So let's dig into the hourly chart and look at when we should look for the next pullback. Okay, so on the hourly chart, they came down here. They gave us a test of support. We were looking for them to break the support. When they did not, I said it would likely be an A, B, C up to a new high, which we see. And I do still think we have a little bit higher to go, where we'd pull back here and push up a little bit toward the 46.70 to 80 area on the futures. And then we should start to look for a pullback from there. We do have a lot of volatility coming into the market this week. You have alphabet soup with the CPI, PPI, IPI, FOMC. You've got quad witching. You've got manufacturing numbers and unemployment numbers, all these different things. It's an incredibly volatile week from a catalyst standpoint. And remember, news doesn't drive the market in the sense that positive news makes the market go up and negative news makes the market go down. It does act as a catalyst to do what the market was already going to do. So that would be the overall idea, is that we've either already made the 5th wave high because we did take out this wave 3 high, pushed up, took out the summer highs here with this move up, and we've already made wave 5, or I think a little bit more likely as we push on up towards 70 to 80. And if we get that 45, 70 to 80 area, even as high as 90, I'd look for that to be strong resistance and then a turn down from that area that should come down and eventually break support. And ultimately, this would be taking shape as a diagonal, as you can see with the expanding lines here. And so what should happen when they do top in this diagonal is we should see pretty sharp selling to the downside. So if we don't see selling to the downside that is pretty sharp and breaks down through support, you know, it can grind up here in the upper part of support, but once it really gets rolling, it should be pretty strong selling down toward the bottom of this range, which will be the 4,600 area or so. We want to see that and then a break of that all the way down toward the 4550 area in pretty strong selling, because this diagonal should sell off pretty hard once it completes. Over on the NASDAQ. Okay, so this is the daily futures chart for the NASDAQ. And as we talked about last week, they made a good high and broke support on the NASDAQ. They broke that 15,800 level. That all moved up with the contract roll, but they did break through support on the NASDAQ and are now pushing back up toward the high. They haven't taken back out the previous high like the ES did. So they are under that 16,300 area we spoke about. They did poke above it a couple times, but haven't really been able to sustain. If they can push over that 16,300 area and sustain a move, we would look for 16,500 or so to the upside to make a new high, and then a turnover from there in wave 2, because remember the NASDAQ was much more bullish in the sense that it was impulsive than the ES was. And then we would be looking for a wave 3, 4, and 5 higher up toward about the 18,000 to 18,500 area or so to complete this last move up. And then we'd look for turnover from there. Now, conversely, the NASDAQ has not taken out its high over here from the summer on the futures chart, but it has on the cash chart. So it can be making a bigger B wave as well, and then starting down from there. And so if that's the case, again, we'd be looking for 5 waves down. So with the Qs and the index taking out the highs, we would be looking for a 5-wave move down on those charts that would break through support for a wave 2 pullback and challenge this low here. And then if you see that, we could start to see the makings of a bigger pullback and a bigger C wave. But again, I think that's much less likely given how high we've climbed. Where we're at on the previous all-time highs where B waves tend to get to, I think it's a little bit high. So it is a possibility that we are still in B here to the downside, and then we would need to see a 5-wave pullback really on both charts. So really the NASDAQ is lining up very similar to the ES, where we're looking for that breakdown and rollover, and as long as it's a 3-wave move that holds support, we are looking for a pretty strong move higher to complete to all-time highs. However, if we see 5-wave moves down, then we should start to be cautious to the downside. So let's drill into the 1 hour on the NASDAQ. Okay, so on the hourly NASDAQ chart, they did break down through support here. They got down through the lower level support, pushed down, bounced off of the 21 moving average for the daily chart, and then gave us a corrective move back up to where we are now. Now, they did get back above 15,300 or 16,300, which was the number we were talking about, but they only got above it a few points, and they weren't able to sustain it, and they've come down off of it since. And as long as they stay under the high from Friday, pressure will still remain down on the NASDAQ. If they come back over this high, then we'd be looking toward the 16,500, 16,600 area to give us one more high to go with the ES's high, and then we'd be looking for down from there. So essentially, Friday's high here around the 16,328 area holds the key. If they push back above that, I'd be looking for 16,500, even as high as 16,600 before we see a turn down, but definitely a takeout of this high. And then down from there. If not, pressure remains down, and we should be looking for a pretty strong move down off of this high if they're going to continue to the downside, because it would be the start of a C wave. So you'd be looking for 1, 2, 3, 4, 5 for that move down to take us down back under 16,000 toward the 15,800 or 15,600 level overall. So that would be a 5-wave move. I did not draw that to scale, but that's okay. You get the idea. 5-wave move down toward the 15,600 area overall on the NASDAQ. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it, become part of our trading team, and make sure you're happy before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real people make real money and understand the market in a way that finally makes sense. We have all kinds of catalysts this week, and people wonder where they should be on those catalysts. And Elliott Wave gives you the key numbers to understand what we're looking for and why, and basically what to expect on each and every one of those moves. It can be very confusing when good news makes the market go up and bad news makes the market go down, and you don't know why the market's going to move the way it does. With Elliott Wave, you have the counts and the key levels of support and resistance, and you know what happens when they hold and when they break, and this gives you a clear advantage over the rest of the field. The course itself is 25 videos in 3 parts. First, we go through the introduction, your mindset, and emotion, why it works, the KISS method. We go through the chart setup and tools, everything you need to use along with Elliott Wave Theory to give you the counts and indications that the counts are correct, as well as the Elliott Wave for Beginners area, where we go through each of the waves, what they look like when they succeed, what they look like when they fail, how to use them, how to measure them, how to use the theory of alternation, the corrective depth theory, the pivot, and everything else that goes along with Elliott Wave Theory. The really cool part, guys, is if you don't want to pay the $67, I completely understand. You can get this course for free simply by becoming a monthly member. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the Elliott Wave for Beginners online course. We trade the SPY and the QQQ, and we swing in day trade, so we do trade quite often in my room. And if you're looking for futures trading, individual stocks, income trading, as well as advanced training, you need to check out PT's Throne Room. In there, you get futures trading, individual stocks, income trading, where this week PT cleared 38 points minus the 7-point hedge, so 31 overall ES points, and did very well for his subscribers. And you also get his reduced risk binary method that absolutely crushes the market, gets you in at a cheap price, and get you big multiples on your money, and it's how he structures his trades that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. It is possible we've topped and made the last high here because we did take out the wave 3 high. However, I would expect one more push up toward the 70 to 90 area. This trend line should really contain the move and then push down. We do have indicators showing a pullback should be coming. And so one more push higher into that 70, 80 area and then down from there would be the overall idea. Over on the NASDAQ, they did hold under the 15,300 area. As long as they stay below that, pressure does remain down, and we would look for a fairly strong move to the downside. However, if they push back over that 15,300 area and Friday's high, essentially we would be looking to the 16,300 area. We'd be looking to the 16,500 to 16,600 area after that. Guys, that is your market update for today. I will talk to you tomorrow.